So this last leg of this rally, again, the S&P hitting a fresh record high for the 44th time, it seems to be fueled by the idea that we're in a rate cutting cycle. And then yesterday we get the Fed minutes. Again, we're seeing the Jay Powell really, showing a lot of leadership when it comes to the FOMC. But some people describe it as hawkish, including Ben Emmons from FedWatch, who was here yesterday. And then we heard from Mary Daly, and this was interesting. She said she was really just kind of worried about the job market, and she saw room for more rate cuts. But then she said inflation data really still matters. So it seems like it's a lot of mixed messaging going on. How are you taking the Fed minutes? How are you taking the comments from the Fed officials? And how do you see it impacting the markets today?
So I think that what we learned from going through the Fed minutes this week is that the majority of members are sort of no longer seeing the same pressures that we've seen on inflation, and employment data is really front and central to their minds. So I think that the commentary that we've been getting this week is supportive of a continuation of rate cuts into the end of this year. I don't expect anyone still has 50 basis rate cuts in their forecasts. But what we're seeing now is really a move to a more neutral policy stance. So sort of 25 basis point rate cut reductions going forward into the end of this year, because the nasty upside surprises to inflation, we think, have been put behind us. We are seeing a moderation in wage growth, as well as those sort of sticky shelter and gasoline prices come down.
So you're confident that inflation's on the right path. I was talking to a few traders yesterday. They said the market's not pricing in the possibility of a pause right now, that there won't be a rate cut at the next meeting. But if you look at the CME FedWatch tool, if you talk to a lot of people, more and more people are seeing that as a real possibility. How do you see that potentially impacting this rally in the market?
Well, I think that the 50 basis rate cut, the Fed being ahead of the curve there really exemplified how they're not keen to be behind the curve. We'd be very surprised if we saw an out-and-out pause right now on the rate cutting cycle. The jobs data, the economic data that we've been getting through on GDP, it's been strong, but it's not strong enough to derail the rate cutting cycle. What's the most important thing to us is that this 50 basis points reduction has really set off a global monetary easing policy cycle, and allowing China and the rest of the world to embark on monetary policy easing really takes a lot of risk out of global markets into, in our eyes, and is a supportive setup for equity markets for the end of this year and going into 2025.
Yeah, we're going to dig into just a bit later in the show. We're going to actually talk about whether headline or core CPI is more important. We just showed the chart a minute ago, kind of showing the divergence between the two. Today, another big event's coming up. That's the Tesla Robotaxi event. I know it's something you're watching as well. If you look since the cut back on September the 18th, Tesla's up over 6%, Mag 7 up almost 5%, both of them outperforming. In your mind, how important is this Robotaxi event when it comes to the Mag 7 AI trade, or is it potentially just important to Tesla? I mean, how do you see it overall?
We think the Robotaxi Day is a very important catalyst for Tesla. We would define it as a company-specific event here because Tesla have really gone against the grain in how they're trying to bring autonomous driving vehicles to market. Very different to competitors. We wouldn't bucket them in the same AI sort of trade, as it were, and we don't see necessarily the same opportunity across all of the Magnificent Seven names. What Elon Musk did back in 2023, so very boldly, he tore up the playbook for Tesla's autonomous driving capabilities. And so all peers, they're using something called LiDAR technology, which is deterministic software. So you're having to code for every corner case to train these cars how to drive by themselves. What Tesla are doing are it's sort of end-to-end neural networks. So this is AI learning to drive the car by itself through vision, through cameras. It's a lot less costly. But most importantly, we started to see the shift away from deterministic software in enterprise software. So if viewers have been following some of these names, you will have noticed the likes of Workday, Salesforce, all announcing AI agents. Okay. So this agential software is a move away from deterministic software, so that AI is actually now perceiving a task and able to replicate it. This is very similar to what Tesla are doing in robotics, and we think will be the way that autonomous driving really scales in the future. And today is really the critical day to prove that vision.